Hi, good day to all. This is Kelvin here. Welcome to this week edition of Weekly Technical Outlook on Stock Indices. So, as we know that this week will be a major week ahead, where on the 3rd of November, hopefully we're able to get the results of the US presidential election. And on this coming Thursday, 5th November, we'll have the outcome of the Fed FOMC meeting. So, as we know that over here is that last week itself, we start to see a kind of a rising yield, US Treasury 10-year yield, that actually start to cause a kind of a indiscriminate selling across the board on the US stock indices. And right now over here is that the market participant will want to know whether the Fed will start to address this concern, which is the rising US Treasury yield. So before we go into a kind of a deep dive in terms of technical analysis configuration on the SPX 500, the Nasdaq 100, the Hong Kong 50, and the German 30 index, let's take a look at the disclaimer slides first. Good. Okay, let me switch on to the CMC charting platform. So let's start off with the SPX 500 with the long-term monthly chart. So this long-term monthly chart, several key elements I want to highlight. The first element will be the long-term circular bullish trend remains intact as the index continues to trade above this long-term ascending trendline support in place since March 2009 low, and since the June of 20 December, pardon me, December 2018 low, it has been trading in a kind of a expanding wedge configuration. The top of the expanding wedge, which is the key long-term resistance, stands at 3650/70, also being defined by a long-term Fibonacci extension cluster level, and as well as the lower boundary of this expanding wedge, which confluence with very closely to the long-term ascending support over here, rests at 2500 level. Now let's go on to the daily chart, which is actually more medium term, which I'm going to share with you all, very important for this coming week strategy. So before I jump into the 4-hour chart, two key elements I want to highlight over here is on the daily chart. As we could see over here is that the SPX 500 has already broken down below the 50-day moving average. Now the next key support level to watch will be at 3230, the former swing low of 24th of September, followed by 3130, which is the 200-day moving average. And another key element will be the momentum indicator, which is the daily RSI. As you could see that the daily RSI is still negative. It still has room to navigate potentially to the downside before hitting an extreme overbought level at 19. Okay, why this extreme overbought level at 19 is important? Because if you go back to the previous sell-off, which is on the 23rd of, which actually hit the previous sell on the on this year February to March, where the RSI hit on the extreme oversold level at 19. After that, it start to form a a bullish divergence signal. Then thereafter, we start to see this strong recovery take shape over here, and also in the prior sell-off that actually led to the low of 24th of December 2018, also hitting at this extreme oversold level of 19. So all in all, what it means that over here is that the medium-term downside momentum is still pretty much intact. So what we could see on the SPX 500, that it could actually start to shape another, we call it another low, this coming week before a significant recovery take shape potentially. Now let's move on to the strategy chart, which is the 4-hour chart from here. So as we know that last week we witnessed a pretty much steep sell-off. So in this steep sell-off over here is that what interesting we could see on the very shorter term, which is the 4-hour RSI indicator. So the 4-hour RSI indicator has started to shape a bullish divergence. What I mean by a bullish divergence, at the oversold level, we start to see a series of higher low, whereas the price action on the index start to shape a lower low. So all in all, in shorter term, what it means that this is a kind of a overextended decline, where we may start to see a high chance of a potential snapback rally. So where does this snapback rally could take us? Potentially, it could take us up to 33.15. After that, we could in a break above 33.15 should take us up to 33.90. So what is 33.90? If you could actually draw a Fibo retracement, pardon, let me draw a Fibo retracement from you. Take it from the high to Friday's low, actually confluence with the 50% retracement. And as long as this 34 3456 holes, which is correspond with closely to the 61.8% retracement, as well as the congestion zone over here. We could potentially see the SPX 500 to actually shape another push down to retest 3230, then followed by 3170. So what it means that the strategy that potentially we could see to involve this coming week is, yes, we may start to see a snapback rally towards 3315, 3390, as long as 3456 holds. We could see another leg down to retest 3230, then breaking below 3230, which could take us down to 3170. So what is 3170? 3170 is actually the lower boundary of this kind of a descending range channel that was actually in shape since 3rd September high, which is all-time high, and also the one-time Fibo extension from this all-time high as drawn from here. Okay, let me draw. Okay, pardon me. Let me delete off this thing. Okay, let me draw the Fibo extension again. From here to here. Okay, it's a one-time Fibo extension level as well. So 3170 level is a pretty interesting level to watch. Also confluence with the 3130 200-day moving average that was shown on the daily chart. So perhaps once SPX hit to this region over here, we may start to see a significant recovery. Okay, now let's go on to the Nasdaq 100. All right. Okay, Nasdaq 100, what is trading now is a kind of a very exponential, steep uptrend that was actually seen previously on the 2000.com bubble as well. So on the monthly RSI, it doesn't have a kind of a significant bearish divergence yet. So potentially we could see another push up towards 1300 slash 1300 which is actually being defined by a Fibonacci extension cluster level. And the key support level to watch will be at this 9000 level, which is the 34-day monthly EMA moving average is coming closer to as a support in the coming months ahead. All right, now go on to the daily chart. Okay, daily chart, some key elements I want to highlight over here is pretty much similar on like the SPX. The 200-day moving average, which is coming as support at this 10,370, and also confluence with this 10,466, which is the former range support that has taken shape on the 13th of July to 24th of July this year, and as well as confluence with the 38% retracement of the recent multi-month rally that has taken shape from 23rd of March 2020 low all the way up to the current all-time high that was printed on 2nd of September 2020. So all in all, what we could see over here is that momentum on the medium term is still pretty much bearish, below the 50 level, and it still has some more room to navigate on the downside before hitting an extreme oversold level, which is very close to the 23rd, pardon me, very close to the 23 level. Okay, so let's move on to the 4-hour chart for the strategy for this week. So what we could see is that last week last week's steep downtrend has started to trace out a bullish divergence on the 4-hour or short-term RSI momentum indicator. So what it means that over here is that this particular downside move is kind of overextended on the short term, where potentially we could start to see a kind of a snapback rally. So this snapback rally, where does it take us? Potentially 11215, a break above 11215 should actually start to see 11585. So what are these two levels? Graphically, we could see we call it some congestion level over here, and also on a Fibo or a fractal approach. Let me draw the Fibonacci retracement. It actually confluence with the 50% retracement at this 11585 level. All right. Okay, so all in all, we could potentially now start to shape we call it a snapback rally towards 11215. A break above 11215 should take us up to 11585. But as long as this 11815 key medium term pivotal resistance holds, we could start to shape another down leg to actually retest this 10,670, followed by 10,466 slash 370 level. So what's this 10,466 slash 370 level? It actually confluence with this descending range channel in shape since the autumn high of 2nd of September, and also the one-time Fibo projection drawn from here. Okay, let me draw the feeble projection again. Okay, let me delete this. Pardon me. Sorry about that. Okay, from here to here. Okay, so you can see a one-time feeble extension as well. So what it means that this 10466 slash 370 level is pretty significant, as being confluenced by a various couple of technical elements, graphical as well as the feeble extension level, both on the 4 hour and the daily time frame. So if this level managed to hold, I mean, as the day start to progress from here, and it start to shape a kind of a bullish candlestick pattern, and on the daily RSI chart it start to hit the kind of a extreme oversold level. This level could actually form a level where a potential recovery could actually take shape on the Nasdaq 100 index as well. Okay, now let's move on to Hang Seng from here. So Hang Seng on the daily chart, as far as on the monthly chart, we could start to see that it's actually kind of underperformed against the SPX and the Nasdaq 100. It continued to actually shape a series of lower highs after a failure bullish breakout on Jan 2018 to break above the previous autumn high seen during the prior to the great financial crisis in October 2007 at this 31890 level. But what's so interesting about it is that it continues to hold above this major or is a long-term circular ascending support level drawn from the low of October 2008, tested 2 times already. Now supporting at around 21,480. So that is the kind of a long-term levels to watch. 21,000, 21,480. The immediate resistance will be at this 25,550, which is actually this congestion zone over here, as well as confluence with the descending trend line that was drawn from the current all-time high at this 12,280, which is also the failure bullish breakout. All right, so now let's move on to the daily chart or the medium time frame chart, where I'll highlight several key elements to watch from here. So as we could see over here is that since the low of 17th of March, it has been trading in a very complex range configuration, and currently the intermediate resistance to watch will be at this 24,960 slash 25,000 pardon me, slash 25,110, which actually confluence with the recent medium term swing high of 23rd of October, and as well as this descending trend line that was in place since 17th of Jan 2020 that has prevented the previous rally to actually surpass this trend line. All right. Inter- Medium term support to watch will be at this 23,000 level slash 22,830 level, which is the kind of a complex sideways range support level that is in place since 26th of May 2020. RSI is still pretty much negative. It's going to trade below this corresponding resistance at this 56 level. Now let's move on to the 4 hour strategy chart for this week. So what we could see over here is that on the momentum indicator, which is the stochastic, the 4 hour stochastic start to shape a kind of a bullish divergence signal as well, implying that last week sell off is kind of overdone, where we could see a potential snapback rally. So where we could see this snapback rally is potentially it could take us up to 24,600. So as long as this 25,110 key medium-term pivotal support holds, we could see another leg down to retest 23,970. A break below 23,970 should see another potential further slide towards that medium-term, long-term sideways complex range support at 23,100, pardon me. A daily close above 25,110 should negate this kind of a bearish slide scenario within a complex range to see it retest this major resistance at 25,500 slash 26,050, which is confluence with the major descending resistance taken from the in place since the all-time high at Jan 2018. All right, so now let's move on to the last index that I want to share today will be on the German DAX, Germany 30 index. Okay, it takes a bit of time to load. Okay, great. Okay, so before I go into the strategy chart on the German 30 index, let's take a look at the longer term picture first. So from a longer term picture, right, we could see that it's still trading within this long term ascending channel, circular channel in place since March 2009 low. Recent sell-off managed to find support at this key long-term ascending channel or circular channel at this 96,685. So definitely this 96,85 level, pardon me, 96,85 level is a key long-term support level to watch, followed by this 1300 600 level, which is this major range resistance that has been keeping the previous rally intact for two times in a row closely, during February this year and during September this year as well, where it attempt to retest this high before actually shaping this ongoing sell off that was seen last week. So 1300 600 13,600 is definitely a key long-term resistance level to watch, unless we start to see a weekly close above this 13,600 level. It could take us up higher towards 15,020. What is 15,020 is the upper boundary of this long-term circular ascending channel, and as well as a Fibo projection or extension level as well. Okay, now going on to the daily chart, some key elements to highlight for you is this German 30 index has already broken down below the 200-day moving average, as well as the former previous range support level that was in place since 31st of July this year, now turns into a pullback resistance at this 12,340 level. From here, the next resistance, the next kind of a support to watch will be at this 11,250. What's 11,250? 11,250 is actually this former range range high or former swing high of 29th of April to 21st of March, and also this 38.2% retracement taken from 19th of March all the way up to the current high of the current medium term high of 3rd of September 2020. So RSI still kind of negative. There's no bullish divergence that was being seen yet. It has not reached a kind of an extreme oversold level that was seen in the previous sell-off at around this 20 level 21 level mark yet. So now going on to the 4 hour chart, where I want to share with you the strategy that is taking shape. So what we could see over here is that on the Elliott wave or factor approach over here, it actually start to trace out a wave 1, wave 2, wave 3 down move. We call it a medium term impulsive down move. And what interesting over here is that last week low, which is at the low of, okay, let me highlight what's the low of 11,332. It actually coincide with a third wave target, which is the 1.618 target, which is a typical third wave target. And another interesting observation is that after its confluence with this third wave target, the 4 hour RSI also start to shape this bullish divergence signal at the oversold level, implying that in the short term we may start to see a snapback rally or a wave 4 retracement to actually retrace this current we call it a wave 3 down move from the high of 13th October to last Friday low. So how high this retracement, or how what's the potential, we call it a snapback rally for this corrective wave 4, we call it wave 4 target to take shape. Let us draw the Fibo retracement level from here to here. So it could actually take shape up to the 38.2% retracement, maximum 50%, which is a confluence with the former range support level that actually highlight on the daily chart. Now turn pullback support at this pullback resistance, pardon me, at this 12,340. So all in all, what it means that we could actually start to see a kind of a snapback rally to actually take shape. Okay, so this snapback rallies could actually take us up to 12,040, maximum at this 12,340 level. As long as this 12,340 level is not surpassed, we could see another leg down to actually retest this 11,250 level, which is potentially the fifth wave target, or the end of this the C wave, where we could start to see potential recovery on the German DAX itself from here. So as long as this 12,340 key medium term resistance holds. So however, if we start to see a daily close above 12,340, this bearish scenario will be invalidated, and we may start to see a further recovery to actually retest this 13,017 resistance level in the first step. So that's all I have for this week technical outlook on the major stock indexes.